But this is for Norm. This is a vegan. This is completely vegan. No animals were killed during the making of this cake. I know that'll make Megan happy. It's another year, and it's been a great year with Bareboat Traders. Really loved working with all these people, and it's been awesome. Life just keeps getting better, so onward and upward.
Wow, well, welcome guys. What another massacre day.
Crazy day.
Yeah.
Wild.
But first thing first. We're recording this on Thursday. People probably, you see it on Friday or over the weekend. We had a small birthday for Brian.
Yeah.
Happy birthday, buddy.
I
know you for almost 10 years, 10 years, and a decade.
It feels like 10 days.
It feels like 10 days, no. No, but really, it's an honor working with you. I learned a lot from you, from trading, from stock market, from options trading.
Yeah.
And looking forward to many more decades of working together.
Absolutely. Yeah. And thanks to all the BBT team here for having a cake for me. I really appreciate that. Even though when you're getting to my age, you don't really want to celebrate birthdays, but you don't. But at the end of the day, it's definitely appreciated. So another year older, and we've survived another year, and looking forward to another 10, another 20 with BBT and all the people here. So
So we did actually surprise Brian. We kind of threw a little surprise party. He called me. He's like, "Oh, I'm on my way." Like purposefully, I didn't say happy birthday or anything to pretend I forgot. But we did a little, and we filmed it. So we're gonna actually put some edits inside here so you can see. It was really awesome. I tell Andrew all the time. It's one of the pleasures. Like I love doing this show specifically is to get to talk to Brian. Huge learning opportunity for me as well, and I know members love you. So
awesome. That's great.
Brian's book is going to be published. He's publishing a new book, and it's on the layout phase.
It's getting very close. Not really sure. I've got this trip coming up. Not really sure if I'll get it out before the trip, but it'll definitely be out sometime in May. So
looking forward to that.
Yeah, can't wait. I drop it the same day as Fed's meeting. I think it'll be a good one.
Well, maybe I can get Fed Powell to promote it.
Exactly.
If you're having trouble in the market,
we are increasing the interest rate, but buy this book.
Buy this book.
Buy this book.
Yeah.
So we got a full-on packed day. This is going to be one of our really good shows. So here's the agenda for today. We're going to talk earnings. We know Netflix got hammered, absolutely. We're going to talk some Tesla. Look at our trading terminal, some next week earning. We're going to talk about Fed. Powell spoke today. Market did not like it. Elon and Twitter. And then we're going to finish up with playing a game. I created a game for us. It'll be fun. And then if you're watching it on YouTube, we're going to make these into segments. So if you want to go back and forth, you could easily do that. And of course, make sure to subscribe to our channel. Happy birthdays are in order. Welcome, Brian. Yeah. So let's start kind of overall market, Netflix. Andrew and I went live yesterday, talked about it. Brian, what do you think?
Well, as far as the Netflix numbers, I mean, I had told you I was really tempted to short it with by just selling some calls going into the earnings, because I kind of thought that they had a lot of pull forward business during the pandemic, and now people are all going out. We see the travel sector really starting to pick up. So if you're traveling and going outside because it's summer in North America, then you probably, and the price of Netflix is going up, maybe you're going to think about, hey, maybe I don't need this right now or through the summer. So kind of thought they might lose subscribers on that basis. And of course, with the Russia situation going on, I kind of thought maybe that I knew they were going to lose those subscribers because they told us they were going to pull them. So overall, that's why I was kind of negative going into it. Unfortunately, I didn't sell the calls, unfortunately, but I have now sold some puts, which are at 200, and hopefully they'll expire tomorrow, worthless. But that's sort of an options strategy I use around earnings. So wait for the earnings reaction, and then find where the stock tops or bottoms, and then sell some puts or sell some calls above where the topping action was or where the bottoming action was, and then just let them hopefully expire worthless,
Yeah.
rather than try to play options into earnings. So, yeah.
Taking advantage of that implied volatility. a
Yeah,
little
it's
bit,
still there is still a fair amount of implied volatility
Yeah.
when after the earnings are announced, especially if you're getting a big move. So,
Yeah, yeah. And I mean, we talked a lot about it. I did some more reading, and one of the things that was really interesting to me is they canceled their share buybacks.
Oh, interesting.
Yeah.
They were trying to
Yeah.
cancel.
So, Starbucks, now Netflix, canceling share buybacks. But I think just predicting their number of subscribers is going to be really unpredictable because people are going to hop on Netflix, hop off.
How did they come up with $2 million? 2 million users are going to unsubscribe in the next quarter. How do they know that? That's a very huge number.
yeah. That was analysts estimates, was it not? I didn't think
No,
it was.
it was part of the forward guidance.
Oh, the forward guidance
they're
from
estimating
previous quarter?
Over
Okay.
the next quarter, they're going to lose. So in terms of discrepancy, before this earning, they were expecting 2 million growth.
Yeah.
And then this quarter, they closed negative 200,000.
200,000, yeah.
And then they're saying even next quarter is going to be worse. So I don't know. It's tough.
Yeah, well, it's a combination of things that, there's a lot of competition now, whereas, you back up a year or two, there wasn't a lot of competition for Netflix. Netflix was the go-to streaming service, right?
Yeah.
And so now you got a lot of competition, and they're raising their prices. Now they're talking about where they weren't even willing to talk about it before. They're talking about an ad subscription service, so you'd get the service at a lower price, but you're forced to watch ads.
Yeah.
And they're talking about now, they're admitting that, all this password sharing is going on, and they've got probably 100 million people that aren't paying for their service or are just piggybacking on somebody else. So
They should have cracked down on that much earlier. I'm surprised that. I remember a few years ago, one of my friends broke up with her boyfriend and then posted something on Instagram that your password has changed, and they said that's what happened when you break up. People start changing your password.
Yeah.
And they should have cracked down on this one. It's such an easy thing to track, and anyways, now they're paying a price. But the interesting part is that a lot of companies are having bad results and drop, but no one talks as much as Netflix. And that Netflix is part of FANG. It's so integrated into our life, and such a huge drop, like 40%, it just shocks everybody.
Yeah.
Not even including people who are not in there. And, I still think that there is something that people are canceling Netflix. Are they people really becoming conservative about their money? What is that? I mean, it's still $20 is a lot of money, or?
Yeah, I think it adds up if you got Disney Plus and you got Crave and HBO Max, and there's so many things. I think, I don't know, if you're a dad, you're like, I have to cut one of them.
I know. Well, I mean, in our family, we were saying, well, maybe we should cut. We've got Crave, we've got Prime through Amazon Prime, and then now we're thinking, well, what are we really watching on Netflix now? Do we need to keep it? So maybe there's a lot of households like that out there going through that same sort of process of trying to figure out, okay, if we're going to pay for one or two streaming services, which ones at this point in time are going to give us the best bang for our buck. So
Yeah, exactly. And if there's a show like Squid Games that you want to watch, you can always get membership again and then cancel.
Yeah.
It's going to be really unpredictable.
I think that's what exactly I did. I canceled my Netflix long time ago, and for a Squid Game I resubscribed, and then I canceled it again.
A lot of people are going to do that. Probably for Stranger Things, a lot of people are going to sign up again and then cancel again. Yeah. One of last quarter when the earning was really bad for Netflix, Bill Ackman took 3.1 million shares, and he was like, I'm so happy Mr. Market gave us this opportunity to get to this amazing high quality company at such a discount. And just 1 quarter later, he sold it. So I prepared a video. Let's watch a video together, and then we're going to react to that video if you guys are okay. Let's go ahead in here. This is, he basically called into CNBC and talked with Scott Wapner. And this is Scott kind of paraphrasing of what he told him.
What changed since January, you think, Scott? I guess, I don't know, what changed? I haven't found anything on Netflix in a while and was worried about the content and also the quality of some of the offerings.
I think, Joe, what changed is the trajectory of the business. And it was clear to me, in listening to Bill and the conversation that we had, that he was as surprised by the results as anybody else. As he told me, the reason why he exited his position after only 3 months at a $400 million loss was, quote, I'm 100% ready to admit when I'm wrong and 100% ready to admit when I'm wrong quickly. So that sort of gives you...
So I'm 100% ready to admit when I'm wrong, and I'm 100% ready to do it quickly. So I thought that was really interesting. I mean, definitely when you're investing investors' money, it's a lot easier to...
But still, it is very respectful because his fund, because of this loss, dropped 4%.
Yeah.
So now year to date, he's only up 2% in his letter. I read the letter that he sent.
I think it's down
Chairman.
2% only.
No, it's up 2%
up
year to date.
2%? Okay.
He was up 6%.
Yeah.
Because of this loss, he lost 4%. And he said, you know, the guy in that range probably doesn't care about the money anymore. It's more about his legacy as a fund manager. But yeah, everyone makes bad mistakes. I remember last year, Warren Buffett said, you know, there's a huge $1 billion loss that I'm fully responsible for that because of one of these textile industry that he invested in there. And it happens to everyone, but so important that he didn't double down, he didn't average down, and he stood up then and said, you know, our investment was wrong and we're coming out of it.
Yeah. Brian, what do you think?
No, it's true. I mean, you know, there's the psychological part of trading is, you know, you don't want to accept that you're wrong. You don't want to accept a loss, so you just keep hanging on. You keep hanging on, and you know, and the market keeps proving you're more wrong until the point gets to a point where you're just, you know, give up and you sell, and that's where usually where the bottom is.
Yeah.
But yeah, it was wise on his part. I mean, he's a very astute trader, investor, and he knows when to, you know, when to call it quits. So
I respect him. He brought this to attention of everyone. He made it public. Everyone know I bought this, and now he's happy to accept that. It might affect his career, yes, but you know, everyone's down. I mean, everyone's make mistake.
Yeah. One of the things you said is that the business model is now a little uncertain for us. We like predictable cash flows. And I put up this chart. It's basically a product life cycle, a business life cycle. We know that Netflix is probably here at the mature stage. There's a lot of competition. The market is segmented. There's Disney Plus, there's HBO Max. Now I think it's all about, hey, can they pull it off? This ad business, is it going to go up or are we going to go down? So it's that question that maybe was really unsettling for him. That, hey, I don't know if we're going to go this way or that way. I don't want to take that risk. Yeah. So it was interesting.
I mean, it's the same when you get into a position with day trading, and then, you know, you're in a position and maybe the stock's just consolidating. You're thinking it's going up, you're long and it's consolidating, and at some point you think to yourself, well, I can't really tell if this is going to go my way or if it's going to go against me. So, you know, in a lot of cases, I'll just get out if I can't tell which direction my trade that I'm in is going to go. Then I'm more inclined to just bail on it and let it do whatever it's going to do.
You know,
so
I had a member today, Brian, told me, oh, I bought Netflix at this price. I'm down really bad. What should I do? And I said, you know, I can teach you maybe how to write covered calls, make some income. But at the end of the day, if the thesis has changed, you should dump your position and take the loss. Like, I can teach you how to make like weekly incomes from it, make the pain a little less, or how to hedge it. Yeah. But you might as well just dump it.
If you are in a losing position, covered calls is the way to go. But you always have to ask that question. If anything, Bill Ackman got my respect. If anything, I don't make fun of him. Everyone, you know, it's the nature of the market. And I have huge respect for him. He dumped it first day. I was wrong. I'm out. I'll make it up that $400 million somewhere else.
Yeah, exactly.
100%.
Yeah, it's not
no shame.
No shame. Speaking of shame, no shame.
Shame.
This man used to be protective of our calls. Now he's the number one put seller. You know, Jerome Powell came on TV today and said, you know, 50 basis point definitely on play. Right. I would say that this is quote from what he said in today's, I think it was an interview with Bloomberg. I would say that 50 basis point will be on the table for the May meeting. I looked at the probability for 4th of May. Now it's at 100%. I think 3 weeks ago when we recorded, this was only at about 80%, 79%. So now we know that this is a fact. Next meeting, which is in June 15, a 75 basis point is also in play at about 70% probability. So market is saying Fed's going to get really aggressive.
How do they get these numbers? These are based on the traders' bets?
So there's a couple of ways you could look at it. You could look at Fed's future fund. So you could look at Fed's rate, but in the future market, and then kind of get an estimate. But this is a survey of traders. So it's based on a survey of traders of what they think the rate's going to be. Yeah.
Yeah, I mean, it's nothing more than a prediction at this point, and people are leaning towards a pretty significant, more significant rate hike in June. But as we were talking before before we started recording, we're going to have at least 2 data points of inflation between now and that June meeting. So depending on how those things turn out, I mean, if inflation does in fact start to fall off a bit, and we have peaked, then that percentage will drop. So it's again, it's just a prediction at this point. Nobody knows what for sure what's going to happen.
Yeah, it's definitely been painful. We talked about when there's Feds actually doing the cycle, market tends to go up, right? And we're waiting for that market to go up.
Yeah, I mean, market definitely is adjusting. There's a lot of uncertainty. Market goes up when there is an outlook for growth.
Yeah,
and definitely there is not. With the war in Russia, in Europe, with the inflation high, the cost of borrowing is going up. The market needs a light at the end of the tunnel to start moving, and people are staying on the side or in the risk of. I mean, even in our business, Adi, that we, knowing that we have a difficult year. I mean, we try to restructure in a way that we could reduce the cost of development and try to be more efficient, and that might, happen, to contract the company a little bit, and that's part of it.
Actually, very well said, because we are looking into the future. Like, we are good as a company, but looking at the market and growth outlook, and that's what every other manager and CEO is doing, right?
And I think the pressure, a lot of pressure that comes to the market eventually controls the inflation. People go into the conservation mode. Like we discussed about Netflix. Everybody still has $20 to pay, and nobody is still going that way. But people go into the conservation mode. Customers are going into the conservation mode. Families are starting to thinking, and that has an impact on inflation if the pressure is because of too much money. Stock market. I know a lot of politicians want to, dissociate these two from each other. Stock market is the economy. By coming down the stock market, you put pressure on the whole aspect of, employment and economy.
Pensions.
Pension funds, 100%.
California pension had like 3% in Netflix.
I've read that as a meme that the estate fund is also the degens like us.
Oh my God! Yeah, ouch.
Yeah, I mean, institutional investors are all pension funds money. These are the money that need to. But we discussed that interest rates are going up. Yes, cost of borrowing is going up. But look at Canada, is aggressively increasing interest rate. I think we had 1% interest rate hike by Bank of Canada, but stock market is still holding really well. But there are other reasons on that, because it's very heavily weighted on financials and energy and basic materials.
Right.
Yeah, exactly. One thing, there's that magazine cover thing that say once something shows up in a magazine cover, it's usually that means it's the end of it, because magazines and journalism get to it really late.
At the end, yeah.
So hopefully this is a sign that the relief rally is on the way. This is the new cover of Economist. I thought I'll show you guys. It's pretty interesting.
Very interesting.
Right?
Yeah.
The Fed that fell. It's interesting because I saw that in a presentation a few years ago, not this one, but this phenomena that when it goes into, it has a name for it.
Yeah, it's called the magazine cover.
State or something?
Yeah, which basically reverse. The interesting thing is Brent Donnelly, which is Peter's cousin, actually has done research on this.
Yeah, exactly. Yeah. So one thing in 2008, right in September 2008, I saw that something that Time magazine that, grab for your dear life, and essentially what it was saying, go and buy beans and canned food and stuff. And it was really, really funny. But as you know, that was just what a buying opportunity back in October 2008.
Yeah, I'm trying to see what the name was. It's bringing me, let me see if...
Magazine cover indicator.
Indicator, magazine cover indicator.
Yeah,
indicator.
Cover. So when something hits, although Economist is actually a very progressive thing, but when you look at 2018, up to the tightening, the market drops, but as the tightening starts, market actually starts to market doesn't like uncertainty. That's
Well, and it's forward thinking too. It's for, it's always, the market's always forward looking. So, when things look the worst, progressive, forward thinking people are thinking, okay, we're really at the bottom. So now we need to start, putting in a bit here, starting to build a position again, because looking forward, things are probably going to look better. So
Yeah.
I read that article, by the way. I'm subscribed to Economist, and I think it's a little bit unfair to the Feds and central banks. We dealt with one of the biggest crises that human has seen in the last decade, which is the pandemic. And they had to do everything to keep the economy going from collapsing. And I think they did a great job. Now blaming everything on inflation, on Feds, a little bit, I think it's unfair. I mean, that's my take.
And it's always easy to look back and say, oh, we could have, should have, would have done that, right? And it's not. I mean, it's easy to be a prognosticator when you're looking back, saying we should have done this or should have done that. So, and to be honest, I mean, a lot of the stuff that's going on right now with inflation, probably half of it is driven by this Russia-Ukraine situation and all the prices that are going up on energy and materials.
There's a chaotic lockdown in China right now.
And then you throw in China. I forgot about that. Apparently, there's some ports where you can hardly see the water for all the ships that are sitting there because no one's there to load them. There's no product to go on. It's just so
I have a friend who lives in Shanghai. There's another lockdown for 2 weeks, and based on his said, I didn't cross-reference, the Chinese are not allowed to leave the country right now.
Yeah.
That's, completely shut down the country. And it does come up into the market eventually. That's chaotic.
Yeah, for sure.
Exactly, yeah. I did a poll on my Twitter, and I asked which one contribute to inflation more, fiscal policy or monetary policy? And people mostly said monetary policy, but the correct answer is actually fiscal, because that's a direct cash injection into the economy. It has a higher velocity.
So monetary policy is the interest rate, fiscal policy is the balance sheet of the Feds?
No, the fiscal policy is basically the budget. So those $1,200, those $600 that the government sends out, those are part of the fiscal policy. So that's basically the budget of the government. Whereas the monetary policy is mostly just the interest rate, the balance sheet, things in that nature, which is mostly just the asset swap. So you're buying bonds and then putting cash into the bank, increasing the reserve, and then they gotta use that cash, so they increase loans and things in that nature. But I mean, that definitely is unfair to Fed, I would say, but it's not a popular thing to say right now.
Definitely,
it's a lot easier.
Somebody needs to
get the blame.
Yeah.
Tender offer. Elon has made an offer. I did some research today. I think this was really interesting. So news came out today that he has secured some funding. So he's talked to Morgan Stanley, some banks has secured. 46.5 billion he has secured, which actually puts, with already 10% he owns, puts the potential offer at a $64 a share. So it means he has enough money now to make an offer, not at $54.20, but at $64 a share, so 18% higher. Market didn't really react to it much, but it seems like he's serious. Since we started shooting this, he's been tweeting about, that he want to take care of the bot problem in Twitter. I know last time we talked, Brian, you said you don't think the offer is serious. What do you think now? He's secured some funding.
Well, he has secured funding, which makes obviously gives it more credibility for sure. I guess, and a lot of people feel the same way. I mean, I still don't get it. I don't. He's got SpaceX. He's got a really successful car company, which people argue is more of a technology company. He's got the tunneling thing going on. I don't understand trying to understand Elon Musk is a fool's game. You're never going to probably understand where he's going and what he's doing for sure. But I don't know why he's.
It's free speech or self-promotion.
Just on the topic of that, I think you guys are both saying you don't understand. I have a TikTok video. It's only 15 seconds. Let's watch that and react to it. Okay. I think the person has an interesting perspective on Elon wanting to buy Twitter.
Hopefully. Well, and I don't know what this is going to say, but I've been saying all along, the guy he just seems to crave attention. So I mean, if this is a way to again satisfy that need he seems to have to be an S disturber and create controversy and create attention for himself, it's completely kind of, if you look at it from that perspective, maybe it's understandable.
Yeah. And I think it's a much better thing for Twitter to be a public company. Now imagine right now Twitter is being accused that the Kingdom of Saudis are controlling the Twitter, the freedom of speech, and all of those stuff. And
Sorry, go ahead.
Yeah, it's a public company, and they have to do a lot of reporting. Now imagine this giant is a private company, and nobody knows what decisions are being made. And as much as Elon Musk wants to say I'm sharing everything with people, but there's a lot of decisions that are being made on the back end. I might just, what about the privacy? How do I trust that you're taking care of my privacy and stuff? So I don't know if it's a good thing or bad thing. It might be really a self-promotion, or he's really thinking that he's the guru of Twitter.
Yeah, I mean, we praise Elon a lot, so let's see other perspective. Let's watch this together.
Because he believes in its potential to be the platform for free speech around the world, has to be the biggest load of bullshit I've seen in a minute. So let's unpack that. Elon says he's a free speech absolutist, which sounds awesome, but would a dude who loves free speech so much have the former Secretary of Labor blocked on Twitter? Yeah, he blocked Robert Wright for criticizing how he treated Tesla workers. Would a dude who just loves free speech offer $5,000 in bribe money for a guy to delete a Twitter account that tracked his private jet? It just doesn't sound like he loves free speech when it's about him in any negative way. Oh, fun fact, if Elon ever wants to get into politics and runs for office, then he can't block people that disagree with him because it's a violation of free speech. If free speech means that people have the right to disagree with you, then you can't fire employees that disagree with you or fire an employee for posting a review of your self-driving cars. Let's also remember when he manipulated the price of Dogecoin by tweeting about it right here, shooting it up, and then dumping it. He's also been banned by the SEC for manipulating Tesla's stock price with tweets. This isn't about free speech. This is about control.
So, kind of adding on.
It's a little too. I mean, it would be a little bit harsh to say he definitely wants to control, but definitely I wouldn't consider this as a good move for Twitter. I mean, either left or right. So having one platform for yourself, like even the Truth Social, it's a private one. It didn't get as much as traction that they wanted. You don't want a platform that's one person or one party or one
viewpoint.
One viewpoint controls it.
There already is. It's called group chat.
Group
get
chat.
on a group chat and talk about it.
Exactly. It's
like a messaging.
Yeah.
Yeah, it'll be interesting. One thing though, as a trader, I care about. I looked at the option chain on Twitter. Brian, I still think some $55 call could be really juicy. Some YOLO. No, to buy.
Oh, to
know?
buy.
If the
Yeah,
offer actually goes through.
I didn't see where Twitter went out today. What did it go out at?
I think it closed at like $46.
Oh, okay.
Like that.
So
after hours, it did a little bit of volatility. I don't know.
Yeah.
Was it the earning today or it wasn't?
No, I think
No,
it
there's
was the
nothing,
tweets that
Tweets,
Elon did.
Yeah. So, I mean, clearly, if you look at it from a market perspective, the market is speaking, and there's still, obviously, I mean, if he's putting together a $64 offer, if it's trading at 46, there's still an awful lot of skeptics out there thinking it's just more talk.
More talk.
But we'll see, like I said, Elon, you never know.
You never know. Yeah.
What's going to come next?
So let's finish the show. It's been an awesome show with a game. It's a game since we're almost halfway to the year. Is who's had a worst year so far? Who's having a tougher year?
Ooh, yeah.
Iraq, man.
Yeah.
Lost 400 million in about 90 days. Jim Cramer, a lot of wrong prediction these past few months.
Netflix buy at 400.
400, yeah. A lot of wrong prediction. I know it's a tough business, but a lot of them. Cathy Hood, funds down about 35%, and the king of SPACs, cumulatively down 85% on all his SPACs. So who's been having a tougher year this year?
I mean,
Well, yeah. Certainly all of them have not had a good year, and it's come off a couple they've come off a couple of really good years. So I mean, but you can't just keep preaching the same stuff year after year, month after month, and expect the market to keep going in your direction, right? So you've got to be sort of prepared for when things do turn.
Andrew, who do you think had a tougher year?
I think
We know you respect Ackman, so definitely not Ackman, but
yeah. I mean, Ackman is positive, is still 2% for the year. I think Candid is probably and Shamat. I don't know how much of his own money is in those SPACs, and that's another thing. You know, OTM, other people's money.
Yeah.
That's the thing when you're getting into that area. It's not your money; it's other people's money. You get your fee or percentage or management fee, but they're all people very well off. You know, billionaires or hundreds of millions of dollars assets. You know, you get down 30-40%, you're still way above everyone else.
Yeah.
I don't think any one of them are actually having a bad night. They're enjoying their life.
no, they're not. They're not losing any sleep, definitely, when they're collecting that fee. Yeah, that's for sure. I mean, today was terrible. Overall market, still defensive, but a lot of sell-off. Year to date, let me bring this up. Year to date, everything's down. SPY down 8%, IWM 12%, Qs down 17%. Let's go to next week earnings before we say bye and see what's going on in the earning calendar. Next week we got some big names coming up. So we got Google, Microsoft, Facebook, PayPal, Apple, a lot of actions.
Apple, yeah.
Amazon,
what are you guys
Amazon,
looking forward to?
Yeah, MasterCard and Visa probably is got to be there. Some energy plays at the latter part of the week.
I'm very interested about Meta, Facebook, and see how they're doing, how much money they lost on Metaverse. It's a really big shift for them. It's a huge investment, some sort of a gamble for Zuckerberg.
Yeah.
Did it? I know Facebook was flirting with 200 today. Did it actually, with the market sell-off, did it drop below 200?
Not sure. No, I think it was still above 200.
188, down 6%.
Really? Oh my
Man, did it
God.
too? Because it was really trying to cling to 200.
Down 6%.
Brian, be honest. Did you sell some puts on 200?
I kind of looked at it at one point. I thought, well, maybe it is going to toll 200, but yeah, no, I didn't. Thank God. So
I saw a really interesting stat that about like 70% of Nasdaq right now are below their 50 moving average, and Nasdaq is only down 16%, which goes to show you how much systematic risk is for Q holders, people who are holding Qs, if Apple or Google disappoint. So these two guys, being like 15, 16, probably 18% of Nasdaq, they're holding a lot of weight.
they are holding up a lot of the market. There's some of the real, when you talk about those internal numbers, those internal statistics, it clearly tells you that there are a few really heavily weighted companies that are holding up that index. And like you said, Google, Apple, which has really been performing not badly.
Not bad, yeah.
Google, Amazon's even been.
Except these mega companies, I don't think any other company, they're expecting a growth in the next quarter or in the next 2 quarters. All these small to medium businesses are probably struggling right now. I mean, Apple even might be under pressure, but only these mega corporations that can have any expectation for growth.
Yeah.
No one else.
Yeah, definitely. Tough year.
It's going to be a tough year, yeah. Absolutely.
All right, well, let's finish. There's a little bit cake left. Let's go finish that
All right.
up. Celebrate you, Brian. Looking forward to the book. Definitely like, subscribe. Let us know if you got questions. We're like trying going live, so that's been fun.
Yeah, we're
gonna do that
showing
more
Santiago working hard on the back, yeah. So he's put yourself into the camera too, so they know that who's behind all of these.
Yeah.
So he's trying to fix the going live in that, and high quality. We're fixing on that, and yeah, follow us on Twitter. Adi, you had a page with your Twitter.
Yeah.
Adi and at Bearable Traders and Brian Pezim. So guys, follow us, and if you have any question, like, subscribe, comment, and
Yeah, shoot me an email. You got investment ideas, or you want to bounce off any trades, shoot me an email, let me know. And if you want to know what earnings are happening, all of this stuff is happening at Trading Terminal, absolutely free, made by traders, for traders. So check that out. Till next one.
cheers.
See ya.
Cheers, everybody.